Okay, good morning, everyone, and welcome to this morning's event, an Appendix 4C results wrap. My name is Mark Tobin. I'm the founder of Coffee Microcaps for anybody who's joining us for the first time and anybody who is a returning guest. You're very welcome back to this morning's event. I'd like to mention DMX Asset Management, our sponsor for all our virtual events. You're looking for a microcap fund manager or microcap funds, be sure to check out the DMX Asset Management website. You can get all their PDS and financial services guide and latest reports on there. Compliance and disclaimer slide. And for anybody who is joining us for the first time, the companies we generally have on here are capped under 300 million in revenue and approaching cash flow break even, or indeed are already profitable. We generally don't have companies from the resources or the biotech sector. So what I like to call industrial microcaps, which is encompassing technology, financial services, healthcare, more broadly. Yeah, it's quite a diverse mix after those two sectors are excluded still. This morning's webinar, for anybody joining for the first time, we're going to have a 20-minute presentation followed by 10 minutes of Q&A. If you do have any questions for the presenter, please type them in the Q&A box rather than the chat function. Just makes it easier for me to moderate the questions for our presenter. And please note the webinar is being recorded and will be posted on the Coffee Microcaps YouTube channel tomorrow morning. In terms of following everything we're doing here, Coffee Microcaps, Twitter is probably the best place to go. YouTube for the recording of this webinar and indeed all our previous events. Be sure to subscribe to the channel so it comes up in your feed. LinkedIn, and I also write a monthly free newsletter which will be coming out later this week with an update on a lot of the microcap fund managers, and you can get that on the Substack platform. This morning, we're welcoming back Nick Pollock, CEO of K2fly. And with that, I am going to stop sharing my screen and hand straight over to Nick. Yeah, I can see the cover slide of your presentation now, Nick. You're good to go.
Thank you very much, Mark. And thank you, everybody, for joining us this morning and your interest in K2fly. Really excited to be able to share an update on the business. For those of you that don't know the story, we will give you a quick sort of look at where the business came from, and in terms of the overview of the business. Given the short 20 minutes we've got, we will focus on overview and results for today. Last week, we released our 4C and our operations review for Q4, which was an exceptional result, which we're really pleased to do, which demonstrates the continued track record that K2fly is showing. The presentation that I'm going to show you today is already up on the ASX platform. As I said, I won't be giving the whole presentation, so if you want to go back to look at the whole thing, you can download it from there, or indeed it'll be on our website. So just kicking through, just quickly, in terms of Mark's definition of what businesses come on here, K2fly is an ASX-listed technology provider of enterprise software. We are defining a space in the industry called resource governance. I'll talk a bit more about what that looks like in a minute. Our current client base consists predominantly of tier 1 and tier 2 miners globally, and we're very proud of the customer list that we have. Also, I'll touch on that later. We're also very proud of our purpose and mission in this role, in that our solutions definitely contribute to a more sustainable and transparent world. Obviously, ESG is a massive issue across all industries across the globe. But it's also obviously an important thing for the mining community, albeit our solutions are not limited just to that community, but that is our primary market today. So we are a very purpose-driven company, and we actually, in this current environment of labour scarcity and war for talent, we actually attract a number of people from the industry because of that purpose and mission, which is we're really very proud of. Quick business snapshot. As as an enterprise solutions company. Across the top there, you can see the 9 solutions that we have in the market today. Heritage management, access, ground disturbance, tailings, mine rehab, resource reporting, model manager, blocker and mine geology. So those solutions, if you like, are underpinned by a couple of software platforms that we have that we blend together to create these solutions. You can see on the right-hand side there that our customer list is just extraordinary, and we have signed up most of those customers in the last 3 years, particularly in the 5-year history of K2fly, which makes us a very, very global business in terms of the number of sites that we support. We have a significant amount of our business, obviously in Australia, which is not surprising, but as we went global about 3 years ago, we now have 20% in the Americas and roughly 20% in the Europe, Middle East and Africa. So that's a really nice balance. And again, we're represented in sites all over the world and across multiple commodities. So we have no limitations in terms of the commodities that we deal with. We deal with all commodities, albeit we are very well strong in the tier 1 multi-commodity businesses, as well as iron ore and gold. But again, no limitations there. That just is happenstance. We have a very strong board and executive team. The executive team, we have grown substantially in the last, particularly in the last 12 months. We've added a new CFO, a new customer success head to go along with our chief development officer and sales director and our chief geoscientist. That's a really important role in our executive because we have very exclusive and intimate relationships with large mining companies who want to deal with very senior geoscientists in terms of the solutions that we're providing. So that's a key part and a difference in our business. Our board is strong, starting with our chair, Jenny Kutry, who's ex-ASX and ASIC. She's a lawyer. Neil Camby, strong finance guy with a chartered accountant background. Brian Miller, who was the previous CEO, very strong in sales and solutions globally in enterprise software. James Deacon has a strong background in enterprise technologies. And then last but not least, Peter Johnson, who joined us recently with the investment that Maptech took. Peter's the chairman of Maptech. I'll talk about them a bit later, but he is a very valuable addition to the board. Just so a quick summary of the key points in terms of what's behind K2fly. We are resource and asset intensive focused. Obviously, that industry, particularly the resources industry, is going through a continued strong growth. It is stronger now than it was at any time in terms of going back to the previous highs into sort of 2012. The industry is much bigger now and much more sustainable, and obviously different commodities, particularly with energy transition, changing that mix a lot more than it used to be. There's a lot more mix in there. We have recurring revenues. We're a SaaS business, so we have a strong recurring revenue business. Currently, $6 million is our recurring revenue. About $80 million is our total contract value. That's roughly half of our revenue, so that's a nice mix for us. We have massive tailwinds in the environmental, social, and governance space. If there's one key reason why so many of these major mining companies are taking up our solutions so rapidly, given the relative newness of this company, it's really because of that, because we operationalize systems that need replacing at an enterprise level that also provide these organizations with a lot more risk mitigation and protection against ESG disasters or slip-ups, so to say. So we have a number of things going for us in terms of tailwinds, not least of which that trend is a major one. Just going into that a little bit more in terms of what's driving this at the moment and what's driving the take-up of our solutions with that ESG theme. Some of the pressures on these resource companies, I won't go through all of them in detail given the time given to us, but I think a key one is that first one, finite and declining resources. As we transition to a more sustainable world, the demand for things like copper, for instance, is huge. That is a fundamental for electric engines and that transition. I won't go through all of the commodities that are involved in that, but we know where the copper is in the world. but your ability as a mining company to access those properties and to have the social license to be able to mine it is becoming more and more critical. If you sort of switch to the right here, and some of the things that are more specifically affecting that ability, the top 10 risks here that KPMG released this year, and the things that the mining organisations are worried about, which will probably come as no surprise to anybody here on this call if you certainly in Australia and you know a fair bit about mining, but the continued focus on environmental risks and the changes in regulation. So hence our drive into resource governance and our ability to help organisations maintain their operational systems that help them operate more effectively, but also give them the transparency and governance about managing to community expectations and to regulations. Again, number 3, community relations and social license to operate. We recently signed deals with BHP and Rio Tinto in ground disturbance and heritage. It's all about that, and a lot of that is the fallout from what happened at the Juukan Gorge disaster a couple of years ago. So that's a very real thing that happened where there was massive implications for the industry, and we're the only organisation that provides off-the-shelf software to address those challenges. Number 6, ability to access and replace reserves. Again, that comes down to that, not just knowing where the reserves are, but your ability to access them. So we have solutions in land access, we have solutions in the disclosure and reporting of resources and reserves, which is really critical. Permitting risks we address. And then finally, 10, regulatory and compliance changes. That's driving a lot of our businesses. We support global standards, either that are industry driven, like the global tailing standard, or regulatory driven, like the changes to the New York Stock Exchange, which is a regulator requirement for organisations to change the way they disclose their resources and reserves. We're also going through a JORC review at the moment in Australia, and our software supports those standards. So we are not inventing standards ourselves, we are building software that is supporting the rapidly changing environment and expectations, not just of regulators, but community expectations. So how does K2fly Resource Governance address those? So I've just talked about all of that change that's happening at a rapid pace. And again, it's not just the regulators probably struggle to keep up with community expectations, and we've seen classic examples of that in terms of the Juukan Gorge disaster, in terms of the tailings failings in Brazil at Brumadinho a few years ago. All of these things are changing the way that companies have to behave in order to satisfy their shareholders, investors, community expectations, insurers, and ratings agencies, etc. So the way we look at it as, on the left-hand side there, we have the traditional valuation models that would go with any mining company. First of all, you need to be able to access land in order to create those resources and reserves. So you have to have access, and that's a fundamental thing that we provide in terms of our systems there. So tenement management, access with stakeholders, with community groups, with traditional owners, etc. You also have to have resource, and you have to be able to disclose that resource in a proper, well-governed manner that is correct and actually goes with the prevailing regulations in the jurisdiction that you're operating in. So in Australia, that's the ASX defines JORC. In the US on the New York Stock Exchange, it's SK1300. In Canada, it's MI 43101. So our software supports those standards. In fact, a number of our clients are global in nature and are operating across a number of stock exchanges, like Rio Tinto, for example, are operating on the Australian Stock Exchange, on the New York Stock Exchange, and the London Stock Exchange. Their resources and reserves are exactly the same, but the way they disclose that has to be somewhat different across those different jurisdictions. Heritage, we've seen the importance of that. So basically, we're moving from on the left-hand side, where we see very, very traditionally high levels of governance with the mining companies. And as we move to the right, we're seeing rapidly developing standards evolving very quickly. And what we can do is we can provide the sort of governance structures that we provide for those companies. Using those solutions, we can provide that governance consistency across these other really, really critical areas where you can either win your social license to operate, win your access to those properties against your competition, or if you're not doing those things well, you can destroy a huge amount of value in your business. So just to break that down in terms of what we do, so natural resource governance, mineral resource governance, and technical assurance. I'll keep moving rapidly because we're running out of time. probably one of the things we're most proud of here is that, we have a very, very significant institutional investment in K2fly with Tribeca, First Sentier, Wesfarmers and Regal. Maptech recently came on in the last quarter and took 13% of the business as well as a board seat. We're really happy about that because Maptech are a very mature business and they have been in the mining software business. They're the biggest private mining software business in the world with revenues in excess of $120 million Australian, been around for 40 years. And that's a huge validation of what we're doing from a really experienced, global player, and not realizing that they cannot, and would not indeed try to do what we do because it would take too long, but want to be in that space via their investment in us. And obviously some retail left. So just to get to the key metrics in terms of our 4C and our operating review from last quarter, again, really excited about the quarter we had. And, whereas our focus for the last few years at the urging of our investors has been growth, and we want to continue that. Obviously, the message from the equity markets these days has changed a little bit or a great deal, depending on where you sit, which is cash flow break even and path to cash flow break even. So it was a tremendous quarter for us, the Q4, in order that we could deliver a $1.7 million operating cash flow positive result, which sets a course for us, for our investors, that you can see a direct path to that cash flow break even in the not too distant future. So very, very proud of that result. And that is on the back of, a record breaking quarter, both in, revenue invoice, revenue collected, our annual recurring revenue, which is one of our core metrics, and total contract values, leading to that cash flow positive quarter. So that was underpinned by new contracts with BHP Iron Ore, just a 1-year contract, because BHP were in a great deal of urgency to get this project started. We typically would do a 3 to 5 year contract with, if you look at our history, we took a decision in order to take a 1 year because they were urging us to get started and invest and get this up and running for them because of the risks that they saw they were addressing by using this solution, which was significant. So that was a really great sign. Obviously the biggest mining company in the world investing in K2fly and investing in K2fly solutions. Also, ground disturbance, again, the only solution of its kind off the shelf from a standard software practice, replacing sort of in-house software. Rio Tinto extended their use of our heritage solution and basically invested more into that product with us. And we won another new piece of business in Grupo Mexico, which is a very significant global miner, obviously based in the US, and with operations in North America, Brazil, and Peru, for a new basically tailings monitoring solution. So again, tier 1 and tier 2 miners driving our growth continually. I've already talked about the Maptech placement, and that Peter Johnson has come onto the board, and that is incredibly valuable, again, to have that insight from an organization like that. So the validation, the balance sheet strengthening, and then the value that Peter brings to the board. So just to summarize those results quickly, you can see a nice shape to that ARR graph, 15% uplift in quarter to quarter, nearly 80% year on year. That's very similar with our total contract value. So just to explain the difference is, the total contract value is the function of the annual recurring revenue, the license contract times the term plus the implementation fee. So ARR on the left is just license contracts. TCV is license contract times term plus implementation services. And that depletes every month based on the time of the contract. The other thing we're really proud of this year, having just completed the year, is how we've managed to get more price control in terms of what we do and what we sell these customers, in terms of raising the value of our solutions. When we were smaller, less confident, now we're moving to a stage of the business where we're doing bigger projects, bigger solutions, broader solutions, and starting to get paid more value in terms of the licenses. We can see that continuing to grow. That's not the end of it, but you can see almost a 5-fold increase in our average license deal. So the key there is that is not total contract value. That is just the licenses alone, which is obviously the recurring part of it, has grown by almost 5 times, which is a tremendous result. Cash receipts, a huge jump on the left-hand side there from 1.8 million, which was probably a little low in Q3, and a lot of that comes back to timing of invoicing and collections. So if you can see left of that, you can see sort of averaging around 2.7 for the previous quarter. So even if you add back up, dare I say, $1 million into that, it's still an incredible result and a jump. In the middle here, we're saying that our annual revenue receipts from customers is again up at about 80% growth from 7.1 to 12.6 this year. And then clearly a nice step up between Q3 and Q4 of 15% in terms of total revenue sharing. So nice numbers, all headed in the right direction. So just to summarize, we have record growth continuing. So basically, K2fly continues to deliver a track record of growth to our investors, and importantly, we're now adding into that a direction and a path towards cash flow break even. So it's not growth without improvements in the financials. We built a really high caliber team, which I'm incredibly proud of. I've been in this industry for sort of over 25 years. This is one of the best leadership teams that I've ever worked with, and obviously something that I've been closely involved in pulling together from my experience on previous companies. We've demonstrated how we can acquire businesses and grow the revenues rapidly. For example, Decipher, we've increased revenues by over 5 times in the 18 months that we've had it, in terms of recurring revenues. We've got the really sticky recurring revenues of this operational software that will sit in these major organizations for 10 to 20 years. And that's something that we know, and we've only really just scratched the surface of those opportunities with these major miners in the first sites that we've delivered. So don't think when you see Rio Tinto or BHP have taken ground disturbance, that's the end of the story. We're only doing those things in the Pilbara right now. And in terms of those organizations managing their ESG risk corporately, which they have to do these days, you need to do these things consistently across all of your operations. It's not good enough to just say, we fixed it in the Pilbara after we need to be able to demonstrate to our investors, etc., that you can manage these things wherever you are operating globally. And then, of course, again, on that, we have the industry dynamics in terms of that trend, not a fad in ESG, which is being implemented across all businesses, but in particular in the industry that we service. So all of that sort of adds up to a massive growth opportunity, albeit we are very sober about the way that we execute our capital projects and our delivery projects, and managing our costs in order to hit that break-even cash flow point. On that basis, I will leave it at 24 minutes and open for questions.
Thanks, Nick. We've got one question so far from the audience. Do you compete with RPM Global's software? So I think it might be just good to just maybe compare and contrast, K2fly's offering versus RPM Global's offering, if we could quickly.
Yeah. So let me just reiterate a point I made earlier, which is a lot of what we do is what I would call blue ocean. We don't compete head to head with many of the traditional mining software businesses. And in that case, I would include RPM in that explicitly. So, we've all worked with that, over the 15 years of working in the mining software business, know those guys well, respect what they do enormously, fantastic business and company. RPM, I'd say to quickly characterize it, RPM have a very strong advisory business that goes with their software business. We don't compete in the software business at all. They do advisory work in and around ESG. we don't do advisory work as such. We deliver software solutions in the ESG space. So we will build software in those spaces. We will deliver the software. We don't do advisory. So that's the key difference. And from a software to software point of view, no competition.
And then, a question for me also around competition. You know, when you're pitching to whether it's Glencore or BHP, you know, what is the competition you're coming up against? Is it another provider that they have? You know, let's say BHP, you know, okay, they're using you in the Pilbara, but they mightn't be using you, you know, outside Australia, for example, or even, you know, other sites that they have within Australia. Is it somebody else you're going up against, or is it their own kind of internal control monitoring systems that they've built themselves over time that they're, you know, reluctant to move away from?
It's very much the latter. So to the point I made earlier in terms of that blue ocean space, what we're replacing are largely in-house built systems or systems that don't exist at all. But with the very big guys, it's in-house built systems which are, you know, probably well over 10 plus years old and need replacing. They need replacing rapidly now because of this focus on the ESG performance of those organisations. So that has, you know, that has always been something that they were going to need to replace, but with the increased scrutiny on ESG, that is driving the rapid uptake of our products, because we are pretty much, as I said, the only provider of standard off-the-shelf software in these areas globally. So, you know, resource reserves reporting, we are the only company that does that globally. And we are replacing mainly in-house systems or, you know, combinations of spreadsheets and, you know, SharePoint and that kind of nonsense, which we know is not a highly governable way of delivering information to the market or the regulator or the community. So yeah, that's, you know, we have, you know, in terms of our competitive, you know, sustainable competitive advantage, we have a very significant moat with most of the products that we have, because we're the only ones doing it. But we didn't just wake up and decide ESG was a good thing to do yesterday. We've been doing this for 5 years and building out this suite very deliberately into spaces that we knew would have a big impact, you know. So we are going where we think that there is, or we know that there isn't other competitors particularly, very deliberately.
And another question from the audience, Nick, again, it's coming back to the big step up in Q4. The question is, was this you know, seasonality, with Q4 just being particularly large, and, you know, should we see it, you know, kind of even out going forward, or is it, you know, the start of a kind of a new base as all these contracts, you know, start to get implemented, the licensing fees then start kicking in? It mightn't be as large as before, but, you know, we've reset the bar. This isn't just like a kind of a one-off. I think it's what they're trying to figure out.
Yeah, exactly. So I think it's all of those things. I mean, so look, you know, and, you know, our quarterly numbers are available for everybody to see, to scrutinize my answer here, and which should be very consistent. So, you know, we continue to increase our recurring revenues quarter on quarter. We continue to increase our invoicing quarter on quarter. There is seasonality in our business because of that, you know, renewal, the contract renewals. And, you know, it just so happens that Q4 is traditionally a bit bigger. But, you know, the obvious example is that in Q4 last year, we invoiced, you know, 2.5 million. So you can see that significant step up to the 3.8. That is driven by those new contracts we've been signing throughout. So yeah, it's also a result of the you know, business improvement initiatives we've been putting into the business, in terms of, you know, always a big focus on sales, but also a big focus on, you know, our finance operations now and our collections, a big focus on our capital expenditure in terms of new product development, and a big focus on our delivery ability and our utilization within our implementation teams and things like that. So all of that contributes to that result. So rather than just a one-off step up, I would see it as a consistent growth in all of those efforts to get that result. But there is, I'll just want to stress, there is seasonality in some of our results. And you can see that by the graphs that are shown.
And then I'm just going to quickly squeeze in one more question if we can, Nick, if you don't have to jump off right on the half hour. Just on MapTech, what collaborations can you do with them now? Is it on the software side where, you know, your offerings, you know, you kind of build APIs that integrates with theirs to kind of, you know, make it work better across customers who are using both your softwares and various, or is it they can help you drive sales outside of Australia? You know, have they got bigger network of customers in the US, South America, Africa? Just can you maybe flesh out, you know, what having them as such a strategic partner, an investor now means for, you know, K2fly and where the relationship can go?
Absolutely. And because those plans aren't fully into fruition and have been delivered, you know, officially to the market, I'll make some points to that, but I'll be just a bit light on detail, but that's because we haven't disclosed a lot of those plans yet. So MapTech is, you know, a global organization. They have 800 customers. I think they have roughly 15 offices in all of the major mining jurisdictions in the world. The Americas is a very big part of their business, which is a big part of our growth plan as well. So there's definitely synergies there. We don't compete, which is obviously a very good place to start. I would say that you know, part of the reason for us obviously getting together was that is the adjacency in what we do. As I said, you know, MapTech don't do what K2fly do, but we obviously have similar customer bases and markets that we operate in. There is, you know, definitely when you look at what MapTech are probably best known for, which is the sort of general mine planning solutions that they dominate globally, particularly with the majors. So which are sort of building, you know, resource models and block models and things like that that roll up into ultimately end up, the numbers would end up in our resource reserve reporting solution, which is, you know, our most successful product, if you like. Again, the customer for that is the most senior geoscientist that's signing off on those resource and reserve reports that go into the annual report that go to the regulator. So if you start at the top of that pyramid and work your way down, below our solutions sit, you know, MapTech and their competition in terms of deriving the numbers and the resource reserves numbers that go into that reporting. So you can see a direct correlation and value add between us. So if what we're talking about is increased levels of governance to the reporting process, and we're going from the top and working our way down through the different systems to be able to sign off on that and be very confident from those signing off that they can report those numbers confidently, there's a very logical connection between us and them there.
Okay, perfect. Nick, we will leave it there. Thank you very much for coming back in and giving us an update on all things K2fly. And yeah, we'll keep an eye out for further updates around MapTech and indeed the Q1 numbers, which I'm presuming will be out sometime in October.
My pleasure, Mark. Thanks for the opportunity, and thanks everybody for your interest in K2fly.
And just for everybody still on the call, we're having another session Friday morning. We've got 3 companies presenting on Friday morning, so be on the lookout for the invites and the details for that. And I will wish everybody a good rest of their Wednesday.